Hi, welcome back to my channel. Today we're diving into the story of an extraordinary company shaping the future of pharmaceuticals and chemical manufacturing. With cutting edge reaction system and comprehensive plant engineering, they are setting a new standards in the industry. And the most exciting part, they're launching their IPO. Stick around to find out how you can join their remarkable journey. Welcome back, viewers. Let's discuss about the IPO. Let's have first the company overview. The company established in 2012 with the headquarters of Hyderabad, Telangana, India. Employee, they have 378 permanent employee with 823 contract laborers and 74 trainees interns. Over the years, they have become the cornerstone for industries like pharmaceuticals, chemicals, food processing, and fertilizers, providing top-notch glass-lined reactors, storage tanks, and more. The company name is Standard Glass Lining Technology Limited. Their commitment to quality and innovation has not only set them apart, but has also positioned them as a trusted partner for numerous clients across various sectors. Stay tuned as we delve deeper into their future journey, explore their product offerings, and discuss their upcoming IPOs. You won't want to miss this, correct? So, this is the sales and manufacturing facilities across India. Now, let's discuss about the product and which product they have and different products lineup. Standard Glass didn't just follow the crowd, they carved their own path. Their secret is customization. They realized that one size doesn't fit all in the pharma and chemical world. So they rolled up their sleeves and started crafting tailor-made solution for every client. Now let's talk about their arsenal. Standard Glass brag an impressive lineup of over 65 products across three main categories. Reaction systems, the heart of any chemical process, storage, separation, and drying system, keeping things organized and efficient, plant engineering and services, the complete package for setting up your facility. They have break the records and set their high standards. The only company in India that can supply stainless steel glass lined reactors up to 10,000 liters. That's like a small swimming pool for chemicals. But what sets Standard Glass apart? It's their commitment to innovation and problem solving. And let's explore some of their game changing products. What they have: stand glass, no stain glass, cell and tube heat exchanger, smart seal, clampless manhole, extended nozzle. So these are the different products which they have. Now let's discuss about the financials. If you see in this table, they have 3 fiscal years reported. Let's take a quick look at the Standard Glass Lining Technology Limited. The fiscal year 2022, the company reported revenue of 2,401.87 million rupees. This surged over 107% to 4,975.88 million rupees in the fiscal 2023 and further increased by 9.26% to 5,436.69 millions in fiscal year 2024. Their EBITDA also showed a consistent growth, rising from 417.79 millions in fiscal 2022 to 882.56 millions in fiscal 2023 and reaching 1,009.19 million rupees in fiscal 2024. The EBITDA margin improved from 17.30% to 18.36% over this period. Profit after tax followed a similar trend with 251.45 million rupees in fiscal year 2022, or doubling to 534.24 million rupees in fiscal 2023 and climbing to 600.11 million rupees in fiscal 2024. The PAT margin saw a steady rise from 10.41% to 10.92%. Notably, the company's financial health strengthened with the total debt to equity ratio improving from 1.01 in fiscal 2022 to 0.32 in fiscal 2024, indicating prudent debt management. Remember, the debt to equity, which is DE ratio, is a financial metric that compares a company's total liability to its shareholders' equity, indicating how much debt is used to finance operations relative to equity. A DE ratio of 1.01 means the company has slightly more debt than equity, while a ratio of 0.32 signifies significantly less debt related to equity. Overall, Standard Glass Lining Technology Limited demonstrates a robust financial growth and stability, reflecting its strong positions in the industry. Let's talk about the peers comparison. When comparing Standard Glass Lining technology to its industry peers, we notice some interesting highlights. First, if you see in this table, Standard Glass has a total income of 5,496.81 million rupees, which is lower compared to bigger players like GMM, which is 34,665 million rupees, and Thermax, 95,560.30 million rupees. However, its return on net worth stands strong at 20.74%, slightly higher than GMM, which is 20.23%, and much better than HLE Glasscoat's 7.99%. This indicates efficient profitability for its size. When it comes to EPS, which is earning per share, Standard Glass is at 3.52, which is modest but reasonably given its scale. From context, Praj Industries has 15.42 rupees, while Thermax tops the chart at 57.28. Now let's talk about NAV, or net asset value per share, which reflects the company's book value per share. Standard Glass has 24.55 rupees, a starting point compared to larger peers like GMM, which is 215.22 rupees, or Thermax 394.10 rupees. Now let's talk about the IPO details. IPO date January 6 to January 8, 2025. Listing date Monday, January 13, 2025. Face value is 10 rupees per share. Price band 133 to 140 per share. Lot size 107 shares. Total issue size is given, aggregating up to 410.05 crore. Fresh issue 1.5 crore, which is 210 crore. Offer for sale 1.43 crore shares, which is 200 crore. So they are procuring 210 and 200 crore from fresh issue and offer for sale. Now let's talk about the utilization of fund, what they're going to do with the money. Now this Hyderabad-based company, the 10 crore allocated for capital expenditure to purchase machinery and equipment. 130 crore to repay or prepay fully or partially certain outstanding borrowings. Borrowings repayment includes repayment or prepayment of borrowings availed by S2 Engineering Industry Private Limited. 30 crore investment to fund the capital expenditure requirements of its wholly owned material subsidiary and S2 Engineering Industry Private Limited for purchasing machinery and equipment. Let's have a conclusion. When considering whether to invest in the Standard Glass IPO, it's important to take a closer look at the company's financial and its position within the industry. Standard Glass has shown a promising return on net worth of 20.74%, which is on par with some of its larger peers. However, its earning per share, which is EPS, and NAV, net asset value per share, are significantly lower compared to companies like Thermax and GMM. This highlights that while the company has potential, it's still in a growth phase and may face challenges competing with more established players. Another key factor to consider is the utilization of IPO funds. A significant portion is being allocated to debt repayment and machinery purchases, which is positive sign for operational expansion but may take time to reflect in the bottom line. Investing in any IPO is a decision that requires careful consideration. Analyze the company's financial health, industry potential, and competitive positioning. Remember, past performance is not always indicative of future success. This is the video is for informational purpose only and is not financial advice. Always do your own research, consult with a financial advisor if needed, and make investment decisions based on your financial goals and risk tolerance. That's it from today. See you next time. Till then, take care. Thank you.